morning. It's Chris from Axel as well as Solstice. It's July 6th. Happy 4th of July to everyone. I know it's belated. I was traveling on the road, wasn't able to do the short video, but what I want to do is go over the overall market. Once again, you can find us on Instagram, Discord, as well as X. The YouTube weekly video is for free. And remember, this is for illustration and education. We're not a broker dealer. Our past performance doesn't give us any indication of future results. Use at your own risk. Let's go to the first slide. And I want to wish everybody, I hope they enjoyed the 4th of July. They are safe and coming back home. And let's go to the first slide that I have up here. And what I did, actually, I put the SPY, the Fortune 500 company, in showing the overall from the October 2023. You can see that's the 2022, that's the 2023 recovery from the 2022. Basically, we're almost flattened out. In 2024, we had this low to this high. We came back in April down here and we rallied back up. We missed basically on the weekly chart or the daily chart that linear regression uptrend channel, and we rebounded on the 116 simple moving average, and that's the pivot point or the control point, basically giving us a reversal from the prior August lows and basically recovering from the tariff that month and recovering that area and continuing higher. We got that professional gap up here, and remember, we trade what we see, not what we think. And that downtrend in the RSI reversed back up, and we are in a continuation uptrend on the weekly. But the daily chart is starting to get a little bit exhausted. I am not saying we can basically penetrate that linear regression uptrend channel and clear it, look above, maybe continue. And if we don't and we fall back through, pay attention to the 50 SMA and the 18 on the charts on the daily. So what I want to do is on the SPY show you the daily chart. And the reason behind it is basically showing you these little tiny gaps. This was the February high, this was the April low, and we reversed back and we claimed the 18 SMA and the 50 and 18 crossed up here and continued higher. We've been hugging the 18 simple moving average, but unfortunately we do have this small gap here. We have this small gap up here. We have another gap up here, and there's another one up here. So what I'll do, I'll mark these gaps with an oval. Let's get a little gap. We'll mark them so everyone can see them. And that professional gap on Thursday, because Friday, remember, Friday was a holiday. It was 4th of July. European markets are open on their schedule, as well as the Asian market. We had a reversal that day, but I wanted to show this area, very importantly, to pay attention to these three major gaps, 1, 2, and 3. But this one I'm not worried about unless something really happens. Because remember, on the 9th of July, Donald Trump is going to send in the global market that letter for the tariff. Is it going to cause a reaction for people that didn't negotiate the tariff, or is it going to cause in the global market between importing and exporting a gap in the manufacturing cost of goods? So this is very important to pay attention to it. So what I want to do is zoom in here, show you that little gap between here and here. We can actually redo this. I'm going to do this a little bit more. Remove this drawing. We're going to grab this area with this one right here and mark it as our large gap. We got 1, 2, and 3. I am paying attention to the 18 simple moving average in the backside of this linear regression uptrend channel that we broke out of. And at the same time, the 50 simple moving average, because it will catch up, because we are running away from the 50 quite a bit up here, but the 18 is usually retested in case of a little bit of noise in the market, and we have that uptrend channel up here. So I will show you how to look at the measured move or the Fibonacci on this chart from the prior year. So we're going to go 3 years back on the weekly, and what I would do is go get the Fibonacci. We grab this high from the prior year to this low in January. Basically, you grab the highs and lows and you get the extensions to the upside and downside. That way you are aware where your extensions are heading to the upside or downside. You can see here I have -1, 23, 38, 61. I don't have the 50 or the 78 or -100, and vice versa, going 1, 123, 138. 150, 161, 171, 200. So remember, we're going to trade what we see, not what we think. And this is very important looking at the SPY. So let's take a look at the SPX. I can do it this way. The SPX is already made. I got these gaps up here and everything that's going on. The most important thing is paying attention to this large candle up here on the weekly when we broke out of this territory, because we tested it once, twice, three times, four times, five times, fell down. That was the tariff, rallied back up, and we are on a continuation. If I drew an uptrend channel, we are in a wedge, very sharp wedge going higher. If I grab this control point, and this you can see it's broken, but if I grab this one, we are in a sharp uptrend symmetrical triangle that we broke out of. I am paying attention to the backside of this channel, as well as the 50 and the 18 SMA when they crossed here on that large gap on the weekly on SPX. Let's take a look at the Mega 7. I have included in the Mega 7, you can see I have Netflix right here. It kind of gives me an overall view how far the tech sector have moved. But what I want to do is go on the daily, show you that there is a little bit of exhaustion in the Mega 7, including Netflix. We can see there was a large consolidation here between the December, the reset, the February highs in January, fell down in April. We rallied up, we consolidated on a grind. You can see that was a large grind here. If I take the 2025 area all the way up, we were grinding here quite a bit. Then eventually we broke up. But in the last week's range, we fell off Monday, Tuesday, Wednesday, Thursday. Remember, Friday was a holiday, 4th of July. I'm watching the 18 SMA in this upper wedge, which is the uptrend channel. You can draw an uptrend channel up here on these charts like this. The control point, you can grab those two, and you can grab this one, which is already the machine did, or you can grab this one, which to make it a little bit more sharper, to have a linear professional linear regression channel and a midpoint right through it, which gives you the 100%, the zero line, and the 50. There's a 60% here and there's a 20% here, or vice versa, whatever you want to do it, 80 to 20, and the midpoint would be 50. So this is very important to pay attention to that tech sector. You can see when we were grinding, there was divergence in the RSI that was moving up, while the RSI was getting weaker, and we got that sharp breakout. Then we fell back in from this point to this point until this is cleared to the upside, and we clear these little peaks, because we have this valley here, we have this valley. If I can get these control points from here and connect them up, we are in an uptrend unless we lose this area here. Then we have to pay attention to that channel. In case we fall through the 61 in this channel, then we look for the 50% for basically in the RSI highs and lows, to see if there's support, or there's going to be continuation low, or we're going to break up and go towards the 80 in the RSI. So let's take a look at the E-mini S&P. So I'm going to unlink it. We're going to go to the micro ES, and what I'm going to do in the micro ES is basically I marked in the last 3-4 weeks these two oval, and I said pay attention to this one and the one on the top, and I kept moving it to the right. We eventually got here. You can see in the E-mini, because the stock market was closed on Friday, the European market was open as well as the Asia. We sold off that big move on Thursday's move up. We sold off. So very importantly, I am paying attention to the 18 SMA and this large consolidation in this area here before the breakout. That was the December. This is the January. This is the February high. This is the April low, and that was the April 9th. We had called the 51.45 and the 55.66 for the breakout from the tariff. And now we are looking at the tariff again due to the noise that's happening. And you can see that the RSI created a higher peak here, but we have lower values going up. So if this falls through, I'm paying attention to that sharp channel here. I'm just connecting these dots for you so you can see them in relationship to that large one up here. And this will be the first break coming through that linear regression uptrend channel, remove the drawing. I'm going to keep this sharper one up here because we are paying attention to that wedge, and at the same time you have this sharp wedge going up. If I connect this dot here to this control point, this is the sharper wedge. We are in an open cone. If there's going to be continuation, I'm looking for the backside of that large linear regression uptrend channel to touch. If it breaks above, if it doesn't and we fall back in, it's the 18 and the backside of this channel. And finally would be this one where the 50 simple moving averages catch up. Let's do right now the measured move on the chart on the 10-day range in the E-mini. So we're going to change the drawing to the drawing tool. And what I'm going to do from daily, we're going to take it to a 30-day, 6-hour chart. In the 6-hour chart, you can see that large consolidation, break up, consolidate, retest, break up, consolidate, retest, break up. So in the last 5-day range, so what I'm going to do is zoom in here. We don't look at the Friday, we look at the Monday through Friday every week, the prior week ranges, and I extend them to the right. I can do this, edit the property, so you can see everything that I have up here, -1 to +2. That means 0 to 100, 100 to 200, and vice versa. You can actually duplicate it to 300 and the vice versa to the top, but that's sufficient enough to give the areas where the 180 to 200 or the -80 to 100 for reversals usually on the weekly, unless something goes further out. You can see that I have 630 here. If I do this for 30 days back, I put 0, 1, at least I'm going to get the ranges on the chart where those levels, where you can see where the breakout was. Coming back to the 50 SMA or the 180, 200 is usually healthy because this was the first breakout. And if I duplicate this down to here, so that would be this consolidation area in the back here, which is at the 200 SMA where the support is. You can see the machine grab support, resistance, 50% back. I'm not saying it can happen, but vice versa. These extension, resistance, and support, you duplicate down, you duplicate to the top in order to get the measured move on any instrument you trade, whether you trade equities, options, or commodities, or ETFs, they all work similar way. Let's go take a look at the micro NQ. And I'll do the QQQ, I'll do the small cap Russell. And you can see here, it's in a similar situation when we broke out of this consolidation, these two tops, we broke up. This is basically a gap you can see between here and here. That's a professional gap. And now we reset on the session, that short session in the Asian market as well as the European. So if I take the highs and lows for the week, this can be the lows for the week because you can see where Friday was here. And I do the same thing, edit the property, and I extend it to the right. So let's go to 6.2 or 6.1, it doesn't matter. So we'll just leave it that way. So you can see where the extensions are coming back to these levels. There's the 116, that's the 50 simple moving average, and that's the 18. And I'm paying attention to that linear regression channel and the 50% retracement if I end up in this area bouncing, or if there's going to be continue, or vice versa, breaking up to the top. So let's take it to small. I'm going to show you IWM. The IWM has started to show a little bit of life and that large consolidation on the daily. So what I want to do is just show you how to look at it on the daily chart where we are in relationship. I hope this is working. Okay, you can see that this was the December high in 2024. This was the January, February highs in 2025. We fell down. We finally reclaimed this area here, which was the 50% on the annual chart because we looked below it to the -25%, bounced off. We got these little gaps in between and rallied higher. I'm paying attention to this big, large candle that took us down. Is this going to be the breakout in small cap and mid cap? I am paying attention to it because if you look at the value or the growth in the IWF, it's way up there, the growth and the dividend one in relationship to the Russell 2000. You can see this says the Russell Growth 1000. You can see that large breakout out of this consolidation here. We got one test, two tests, three tests. Eventually, this was the fourth, and the breakout coming back to it should act as support in the mid range of it because it's accumulated a lot of volume here for a bounce back, you got the 18 and the 50 right here. I hope this video was helping you. And what I want to do is show you the overall how to look at the SPY volume profile or the monkey bars. I'm going to do the volume profile on SPY. And you can see here, I have the ranges. We can go in the style, go into monkey bars, or you can use volume profile. The monkey bars here is set up. You can see 10-day, 30-minute. I use the point of control. This is the burgundy. If I zoom it in here, just to give you an overall view, let's just zoom in the last 2 days. You can see the volume profile. The point of control is right here. That's a virgin control. That's the value high, value low from the prior day, which was Wednesday. This is the Thursday session, the volume profile, value high, value low, and the point of control. But the time spent was lower, so the sentiment should be lower, and vice versa. If I take the highs and lows, and my midpoint on a fib is right here, that tells me the sentiment is lower. It doesn't have to, but we do have this virgin control point in this one from Thursday that's never been retested. So what I would do on a daily chart, if I go daily, annually, it's going to show me the annual where the highs are, where the lows for the year are in relationship to the point of control, value high and value low on the time spent with the value high, value low on the profile. But what I want to do is break that down. Instead of an annual chart, I'm going to go 3 month there just to show you each month's consolidation. This is the new month that we are forming. You can see that was the annual Fibonacci. You can see the point of control was higher, so the sentiment is higher. But if I zoom in here for this month's range, you can see that the point of control, if I draw a fib from high to low on a retracement, let's just do this together. So we know the highs is 619.22. Let's just get it close enough. 24, and the low is 585.06. Well, we can edit it, and what I'm going to show you, basically, if you look at this one, you can see the highs and lows right here. So if I do editing, edit the property, so the high was 22 cents, so you can anchor it, and the low was 6 cents. So now this is anchored, and I'm going to change the color to make it a little bit obvious that this color is basically for the weekly charts and the monthlies. So I have the ranges on this chart showing me the monthly in relationship to the annual Fibonacci in relationship to the tops and bottom, and you can get the extensions to the upside as well as the downside. You can see we are on 100%. The open, high and low right here. If I zoom in this area, let's just take this. Come on. If I zoom in here, this is your open, which is the box. This is the close on Thursday. So you can see that the profile is now developing, but the sentiment and the point of control and the volume is lower. So does that mean it's going to continue lower? No, but we are paying attention to the global market as well as the tariff and some of the reporting that's going to be happening in the next quarter to see where the outcome is after summer and the 4th of July. I hope this video was very helpful. You have questions, once again, check us out on either website or get in contact with us through X or Discord or getting us an email out. Take care, over and out, and enjoy